Hey, I'm Ryan Reynolds. At Mint Mobile, we like to do the opposite of what Big Wireless does. They charge you a lot, we charge you a little. So naturally, when they announced they'd be raising their prices due to inflation, we decided to deflate our prices due to not hating you. That's right. We're cutting the price of Mint Unlimited from $30 a month to just $15 a month. Give it a try at mintmobile.com/switch.
New activation and upfront payment for 3-month plan required. Taxes and fees extra. Additional restrictions apply. See mintmobile.com for full terms.
Shares for Beginners.
There's a significant amount of change blowing through many industries, and financial services and investments are no exception to that. So I think it's an exciting place to be. I think we have great experience that we can share and bring to a lot of these discussions around innovation, disruption, and what services and markets look like into the future.
G'day and welcome back to Shares for Beginners. I'm Phil Muscatello. You'll notice that when you first buy some shares that there's lots of paperwork. That is until you set yourself up with the company share registry. Now this may sound complicated to start with, but once you understand the procedure, you can streamline the whole process. My guest today to explain is Scott Hudson. G'day Scott.
Hi Phil, thanks for having me on.
Yeah, finally we get you on. So, Scott Hudson is the General Manager, Market Liaison at Computershare. Scott leads many of Computershare's external relationships and engagement activities with industry bodies and market participants, including ASIC, ASX, Financial Services Council, Australian Council of Superannuation Investors, Governance Institute of Australia, and the Australian Custodian Services Association. And you also spent 5 years working, was this a hedge fund when you were with HSBC in London?
Yeah, so I worked for Gartmore, who was a UK fund manager. We had about a $7 billion US hedge fund platform. So I worked for both Gartmore, and then Gartmore sold that business that I was in to HSBC, but the primary client was still Gartmore. So yeah, 5 years in hedge funds. Good times in London.
Yeah, was that exciting?
Very exciting, yeah.
In the city in London, that would have been great.
Right in the middle of the city, yeah. It was all action over there, absolutely.
Mm-hmm. So the term hedge fund is sometimes, we hear a lot, I think it's a bit more in the United States and overseas than here in Australia. But for new investors, for beginners, what is a hedge fund and what were you actually doing in that job? What did you do every morning when you woke up and got in there and opened up the computer? If there were computers in those days.
Well, no, I mean, hey, come on. It was, I got to London at the end of 2001 and came home at the end of 2006. So we certainly had computers. So my role there, sort of two primary things. One was looking after our external stakeholder relations with brokers, prime brokers. They're names like Morgan Stanley, Deutsche Bank, JP Morgan, our custodians. So, very similar to what we see here in Australia, Citibank, BNP Paribas. So looking after external relationships, which ultimately is how I went from, working in London for a $7 billion hedge fund to doing registry in Melbourne. So my whole career has really been about looking after external relationships with clients and stakeholders. So that relationship piece aside, the main part of the role with the hedge fund was actually a fund controller role. And so you had the fund manager who essentially they made the buying and selling decisions of the securities that they wanted to purchase or sell out of. And then, all aspects of the fund then sort of fell to the fund controller. So the primary role was tracking the profit and loss of the daily trade. So the first thing I do is get into the office in the morning and have a look at how the book had gone, either from the prior day's trading or I was sort of working on the Asia Pacific funds and the emerging markets funds. And I picked up the emerging markets funds because the guys thought it was quite funny because Australia's an emerging market, isn't it? Which I thought was a bit of a cheap shot. But basically just checking to see how the funds had actually performed overnight, running the profit and loss statement from the trading activities. And then, running all manner of analytics from then. We'd get heavily involved in new fund launches. We'd write a lot of investor updates. Yeah, we'd get involved in the corporate actions, where there are offers on for the funds. We'd get involved in the voting as well.
And what is a hedge fund?
So a hedge fund, I guess, is sort of a little bit of a catch-all term, but ultimately the term hedge comes from having some sort of protection or balance in place so that you are, I guess, protected or hedged from market movements. So I guess the sort of the more technical term for hedge fund is an absolute return. And an absolute return fund or a hedge fund ultimately looks to try and make positive investment returns regardless of what the underlying markets are doing. The way that you do that is investing into not just shares, but a broad range of derivatives, of structured products, over-the-counter contracts that we would write with our prime brokers and the like. And often hedge funds are, have very, very broad mandates in terms of what they can or can't invest in, or particular areas of speciality. And the firm I worked for was Gartmore Investment Management, and our speciality, you're pretty good at a few things, but really it was the large European companies business. The two fund managers that I worked for there, Roger Guy and Guillaume Ramberg, are probably the best large cap fund managers in the world at the time. Pre-GFC in London for 5 years for a big hedge fund. Learned a hell of a lot, Phil. It was good times.
So you're working for a share registry now. You're working for Computershare. What is a share registry?
What is a share registry? Very, very good question. I think probably the easiest way to answer that is sort of to maybe use some other analogies. And so, when you've got your license and you go to Vic Roads or the RTA and they record who the license holders are, or you go to the Land Titles Office and they register who the owners of properties are, Computershare as a share registry ultimately records the ownership of companies. So who are the shareholders? What are their names? What are their addresses of the companies? And we primarily focus on ASX-listed companies here in Australia, but the Computershare is in 20 countries around the world, and we do this in a number of different capital markets globally.
And this covers all sorts of exchange-traded products as well, so it's ETFs as well, and all forms of share ownership.
Yes, that's exactly right. Yes, yeah, we've seen a huge amount of growth in our exchange-traded funds list book of clients.
So when you buy some shares, you get some information in the mail. What's in that information in the mail?
So hopefully we're actually attacking how much mail goes out. It's interesting because I talk to a lot of people about mail and have done for a long time, and about 70% of what Computershare actually sends to investors over any 1 year is actually goes out the door digitally. So whether that's via email or whether that's via data files. But when you first buy shares and you trade the shares with your broker on the stock exchange, the details of those shareholdings flow through to Computershare, and then we'll often send you a welcome letter as a new shareholder in that company. Now, that may well go out as paper, but importantly, we're also sending a lot of these out to new shareholders as digital sort of welcome letters when you first join and buy shares in a company. And ultimately what we're looking for there is really some key information to get provided by the investor. And the key things here are a bank account so that we can pay your dividends to you electronically and you get your dividend money nice and quick, rather than waiting for a check in the post.
That check in the post is the default option though, really. So if you don't fill out any of this, you'll still get a lot of mail and your check will arrive in the mail.
It may well arrive, and this is not a new thing. This has been something that's been happening for probably more than a decade, and I'm coming up to 15 years with Computershare. So it's it's not a new policy, but a lot of companies really to sort of improve the service for clients and not be sending out not have those delays with checks are sort of implementing or have implemented a mandatory direct credit policy. So, and ultimately the numbers of checks that we're talking about for dividends and the number of checks that we talk about in total is probably less than 5%. So 95% of what goes out to clients with dividends or to investors with their dividend payments do go out electronically via direct credit straight into their bank account.
A colleague of mine was talking to a young person, this was a few weeks ago, who was asking about checks, that she'd never actually seen a check. And this colleague was explaining about checks and how you'd have to, fill it out and then send it off in 3 days to clear and all of how it works. And the young person said, no wonder they never took off.
It's interesting, Phil. I mean, we've actually seen a number of projects in some markets around the world where economies are actually removing the check option, and so we're going through that in New Zealand. So you actually won't be able to bank a check. You won't be able to write checks over there. and that's a trend that we're increasingly seeing. So again, give us your bank account details so that we can give you your dividend money as quickly as possible. So I guess the other key piece of information, and this gets back to dividends as well, is we really want people's tax file numbers or company number if shares are held with a company or a corporate trustee for a self-managed super fund. And really, we need that tax file number to prevent withholding tax being taken out, which, where we do take withholding tax out, where there's no tax file number or no tax number on the record, that's almost 50% of the dividend. So if you're expecting a dividend of $100, you're probably only going to get about $50, $52, $53 actually come through. So very much worth your while making sure that Computershare does have your tax file number so that you do get the full value of that dividend. That money's not lost. It can be claimed back via the tax return, but I'm not sure too many people that would say, I'd prefer $53 to $100, please, Scott. So we definitely want your tax file number. And look, probably the third piece of information that we'd like is an email address. And if we don't have that already, when I look at some of our clients, some of them have got 55 or 60% of their shareholders have got an email address. And, really what that enables much faster, much quicker communication, much cheaper, cost-effective communication as well. So keep in mind, we're talking about shareholder monies to service investors, and so sending an email is obviously much more cost-effective and efficient than and environmentally friendly than printing and postage of letters. And to that sort of opening comment about that there's lots of paperwork and lots of paper. Like I said, I've been at Computershare for approaching 15 years, and we've sort of really had a number of initiatives over a long, long time to try and remove paper out of the ecosystem. And and I think we've been pretty good at that. 70% of what goes out from our place to investors is all digital now.
Investors can also take their dividends with some companies, in the form of DRPs, dividend reinvestment plans. How do they work?
It's a really good point. So, there's a lot of companies that essentially offer a dividend reinvestment plan, which is where we take the cash value of the dividend, and then instead of getting paid cash into your bank account, you'll be issued with shares for that monetary equivalent of that dividend. So if you were due a $100 dividend and you've elected a DRP, share price of the shares is $10, then instead of getting paid the $100, you'll actually get credited with an additional 10 shares onto your shareholding there. Now, a lot of DRPs actually have a slight discount that's available for investors, and so that might make it attractive. And I think DRPs are a nice way of accumulating and growing your shareholding.
And compounding as well. And
compounding, yes. Yeah, that's exactly right, Phil.
And this is something that you look after at the share registry. If someone wants to participate in a dividend reinvestment plan, that's you guys.
Yeah, correct. Yes, yeah.
It's also important to keep all your details up to date with the registry, isn't it?
Absolutely, yes.
Even though mail's not going to your physical address, it still is important for legal reasons and to track what's going on, because it's not like a piece of property, a property you might buy and sell once every 5-10 years, but shares can be traded in all sorts of durations.
Yeah, absolutely. And so, look, where investors do have a change in details, if they're moving house, for example, it's really important to let their broker know. If they're broker-sponsored or have a HIN, and the way to identify that is your identification number will start with an X. That's a holder identification number. HIN starts with an X. Let your broker know, because the broker ultimately owns that relationship with the investor. If it's an issuer-sponsored holding or an I, then come to the registry. So come to Computershare or whoever the registrar is for that listed company.
Well, let's talk about the CHESS system. I think people get confused about share registries and CHESS. What is CHESS, and how are your shares owned by you under the CHESS system? So
share ownership in Australia, there's two what we call sub-registers. There's the CHESS sub-register, which is all of the shares that are held where the investor has a sponsoring broker, or there's the issuer-sponsored sub-register where the shares are essentially sponsored directly with the issuer. And so the registry, we take the ownership records and the share records from the ASX, from CHESS. So CHESS is the sort of the main clearing and settlement system from the ASX. So we take those records and then we essentially splice them together with the issuer sponsored register to give the complete record of ownership of the companies, or the register of members, to be technical.
So this is something that I've seen people talking about, and that the CHESS system is still paper-based. So when you get that piece of paper saying that the shares are in your name or they've been removed for your name, that's actually the ASX's CHESS system. Is that how it works?
Yeah, so the CHESS holding statements are issued by the ASX, yes. And they often come out, sometimes more than a month after a trade has been done, so that it captures all of the trading that may have gone through a HIN over a monthly period, whereas the welcome letter from the registry, should come out fairly close to when you've actually conducted that initial trade.
Is there anything else there that we should cover under the CHESS and registry and the differences, and anything else, any other point, do you think?
Oh, look, I mean, the fundamental one that I think confuses a lot of investors is where do I change my address? We get that a lot. And particularly with broker-sponsored holdings, it's the broker that needs to change that address. They're the one who own that investor relationship. And so, that's why I was pretty keen to sort of get that point across, because we do have a lot of people come to us and say, hey, I've moved house. And we go, you're going to have to call your broker.
Okay. In terms of owning the share, then there's two things. You need to let your broker know, whether it's an online broker or a physical broker. All of your trades are going to be executed by a broker, aren't they?
Yes, correct.
And then the recording for things like dividends and so forth is with the registry.
Yeah, so effectively, the registry gets involved in anything after the trade. So they're the AGMs, they're the dividend payments, and then the corporate actions.
Oh, corporate actions. Let's talk about corporate actions. What's a corporate action?
What's a corporate action? Very, very good question. When I was leaving university and going to join the National Australia Bank for my first job, it was in their corporate actions department, and there was a question I asked because I didn't know what a corporate action was then either. And the recruitment consultant came back to me and said, it sounds amazing. You're going to get involved in company takeovers and annual general meetings and proxy fights. And I had this picture of Gordon Gekko from Wall Street when he stands up at the Teldar Paper meeting and he's pointing at the board and, having a fair crack at the board. And I thought, well, this sounds like an amazing job. I'm going to be like a Collins Street version of Gordon Gekko. It's not quite like that. Corporate actions, I think, sort of is a bit of a catch-all term for company transactions. Let's call them company transactions. They might be mergers, company takeovers, capital raisings. And we've seen a lot of capital raisings over the last 12 or 15 months in forms of rights issues and share purchase plans.
Just if we could break down those, the capital raisings.
Sure.
So recently an example would be travel companies who suddenly didn't have any cash flow and they had to raise capital because of the COVID situation. Just explain that a little bit to us, please.
Yeah, so look, the reasons for companies raising additional capital are many and varied. And so, I guess if I sort of think about this as two broad buckets, one is companies trying to raise additional capital to shore up their balance sheet, or then you've also got companies looking to raise capital to fund growth opportunities or investment opportunities. And Computershare is a listed company in our own right. We undertook a rights issue recently. That rights issue that Computershare ran was to fund the purchase of the Wells Fargo business in the US. So, two very broad reasons why a company is going to raise capital: shore up their balance sheet, or to fund growth or expansionary opportunities.
And the share registry, you're also looking at after the communication for AGMs and voting intentions. Tell us about that.
Yes, yeah. So when it comes around to the time for the companies to run their annual general meetings, Computershare as a registry is very heavily involved in that. And so we actually send the investors the documentation, and that might be the notice of meeting and proxy form. In many cases, that goes out digitally via email, so people can click right through, access all of the key information that they need, the key resolutions, and then the investors can then vote online. They're our systems. Those votes then come back to Computershare. We then start collating those votes until AGM day. And then if you actually turn up to attend an AGM, an annual general meeting, that's going to be a registry team that's actually going to be sitting out the front of the meeting, registering you. So we then take the votes at the meeting and essentially tally those up with the proxy votes that have come through beforehand to then issue the final results to the companies for those resolutions and all the voting that goes on.
And I always highly recommend that people should go to an AGM. Too many people, I think, just look at a code on a screen rather than thinking about the living, breathing company. And they can be quite action-packed at times, can't they? Especially if there's controversial resolutions to be voted on.
Yes, absolutely, they can. They can be a lot more like the Gordon Gekko Teldar paper example that I mentioned earlier. But then equally, there's a lot of our annual general meetings that are very vanilla. Company's done a great job, couple of directors up for re-election. They can be quite vanilla. But, the fiery ones are always I always find them very, very stressful. These are high-profile public events for, my teams and my staff and my clients as well. And we all put a lot of work into making sure that they're successful events.
And just a little aside, if you don't know what's going on, you can also assign your vote to other people that you trust. And we always recommend the Australian Shareholders Association to send your proxy to if you want to have people who work on your behalf and doing good investigations into these companies.
Yeah, absolutely. And we obviously saw a massive change in the annual general meeting space last year with the COVID restrictions, is the sort of the rise of virtual and hybrid AGMs. And so, and I think what's attractive with a hybrid AGM is that just because you might live in a different city to where the AGM is being held, you can still log in and participate and vote online, ask questions online. I think there's a strong argument for a sort of a broadening and a much richer engagement experience with hybrid AGMs as we sort of look to emerge from COVID and move forward.
So in the future, I believe you've mentioned before about blockchain. Now, blockchain's what's behind cryptocurrencies like Bitcoin, but blockchain is the technology that enables it, but it can be used in other applications, and you've got a particular interest in this area as well.
Yeah, look, I mean, ultimately, Computershare is a technology business, and we were founded in 1978. Technology has been right at our core ever since then. And, we sort of look at blockchain like we do any range of emerging technologies, and ultimately, sort of look for the efficiencies that can stem from the application of new technologies, whether that might be reduction in cost, it might be streamlined workflows, it might be risk mitigation. And so, we look at business problems to be solved. And again, these are global questions that we often look at, across that sort of, 20 capital markets globally and the experience that we've got from that. We look at the business problems that can be solved and, then what are the technologies that are available? And blockchain as an emerging technology is just one of those. So I think that space, whether it's blockchain or whether it's enhanced API access, artificial intelligence, machine learning, there's a significant amount of change blowing through many industries, and financial services and investments are no exception to that. So I think it's an exciting place to be. I think we have great experience that we can share and bring to a lot of these discussions around innovation, disruption, and what services and markets look like into the future.
Well, it's interesting that you describe Computershare as a technology company. What sector is it classified under on the ASX?
Oh, geez, I think we're software and services.
Oh, okay. But that's under technology though, isn't it?
I think so, yes.
No, it's good to know. So from your point of view, are there any traps that investors should be aware of in share ownership?
Make sure you buy the right securities, but
apart from getting the right equities, but
distilling it back to sort of shares for beginners. I think the fundamental thing is once you've made the decision to buy securities in a company, stay engaged with those shares and really make sure that your details are up to date. Like I said right at the outset, make sure we've got your tax file number, make sure we've got your bank account. I don't like either not paying people dividends, or there's delays with giving people their dividend money, or taking withholding tax. So make sure that we've got, those crucial pieces of data on file. Again, an email address is fantastic because, you can get, those communication in, 2021 is all about speed and efficiency, and an email address only enables that to happen, enables companies to sort of engage and communicate more effectively and efficiently with investors. Yeah, so just make sure that the details are up to date. If there are issues, then our websites are fairly intuitive. They have got rich functionality in terms of what you can do in terms of updating and accessing information. And for those people that like to call up and deal in paper, then, we still offer that service as well to cater for that choice.
Scott Hudson, thanks very much for your time.
Thanks for having me, Phil. Cheers.
Shares for Beginners is for information and educational purposes only. It isn't financial advice, and you shouldn't buy or sell any investments based on what you've heard here. Any opinion or commentary is the view of the speaker only, not Shares for Beginners. This podcast doesn't replace professional advice regarding your personal financial needs, circumstances, or current situation.
And thank you for listening to my podcast.
Acast powers the world's best podcasts. Here's a show that we recommend.
Hi, I'm Ceci.
And I'm Angela.
And we are the hosts of the Bravo Docket.
The Bravo Docket is a chart-topping podcast that you can listen to understand what is actually going on in the lawsuits that are making the headlines. Ceci and I are two practicing attorneys who take our experience and knowledge of the law and apply it to the lawsuits and legal issues involving your favorite celebrities.
Every hour-long episode covers the facts, the law, and the legality. People have questions and we answer them. From things like Todd and Julie Chrisley's sentencing to why a trending celebrity was sued. We use our knowledge and experience to help you understand what happened. We explain it all.
So check us out everywhere podcasts are streaming for facts, fun, and Law 101.
Acast helps creators launch, grow, and monetize their podcasts everywhere. Acast.com.